Good morning, everybody. So yesterday we have defined the field status variant. Okay. We have defined the field status variant and we assign the field status variant to company code. Now, today, tolerance groups. So what is tolerance groups? In the financial accounting, we have to define the tolerance groups for the following objects. Here, again, in the financial accounting is duplicated here. Please take off these three words. Please take off these last three words. So in the financial accounting, we have to define the tolerance groups for the following objects. Number one, GL accounts. Number two, users. Users means employees in the finance and accounts department. Then number three, vendors and customers. So at this point of time, right, we have to define the tolerance groups for GL accounts and users. Then tolerance groups for vendors and customers we will discuss in the respective modules, accounts payable and accounts receivable. Then first, tolerance groups for GL accounts. Tolerance groups for GL accounts. What does it mean? Setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit and loss account or some predefined account like sundry balance written off account. Again, I am repeating, setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit and loss account or some predefined account like sundry balances written off account. So before going to understand what is tolerance groups for GL accounts, we have to understand one more concept, which is called open items in SAP. Open items in SAP. Open items means pending items. The dictionary meaning of open means pending items. So this pending items concept is applicable to vendor accounts, customer accounts, and some balance sheet GL accounts. So the open item concept for vendor accounts means today we have purchased some material from a vendor and vendor has given 1 month credit and we post the invoice into system. Then vendor account balance is updated. In addition to updating the vendor account balance, the system will display this invoice in the red color, meaning that open item. Open items means pending item. So why that invoice is pending? Pending for payment. So when the vendor has given 30 days credit, we make the payment to vendor on 30th day only. So till you make the payment to vendor on that invoice, the system will display that invoice in red color, informing that to the vendor, informing to the user that that invoice is pending for payment. So when the vendor gives the 30 days credit period, you make the payment only on 30th day. So till you make that payment on that invoice, the system will display that invoice in the red color. That is called open item. So on 30th day, we have paid the amount to the vendor. Then that payment to vendor is again posted in the system. Then the system will turn that invoice into green color. Green color. That is called cleared item. So how the open items and cleared items look alike, I will show you in accounts payable. Then customer accounts. Open items to customer accounts or pending items to customer accounts. Means today we sold some goods to a customer and we have given 15 days credit to the customer. So obviously the customer makes the payment on 15th day only. So when we post this purchase invoice, the system automatically updates the customer account balance. In addition to that, the system will display that invoice in red color, meaning that that is pending for payment. So when we receive the payment from the customer on 15th day, the system will turn that invoice into green color. I will show you the open items in another company code, just for your understanding. In our class, we will see the open items in accounts payable. See, this vendor, Srimati and company, this is the vendor, right? In this vendor, there are 3 invoices showing in red color. So these invoices are pending for payment. So like that in the customer account also, the sales invoices will be shown in red color till we get the payment from the customer on those invoices. Clear, no? Now, this OPM concept is also applicable to some balance sheet GL accounts. So this open item concept is not applicable to the open item concept is not applicable to all the balance sheet GL accounts. It's applicable to some of the balance sheet GL accounts. So what are those balance sheet GL accounts? Outstanding expense account, outstanding incomes account, then prepaid expense account, and incomes receivables account. Sorry, incomes received in advance account. So these are the balance sheet accounts to which the OPM concept is applicable. Here, what is this outstanding expense account, outstanding incomes account, etc.? Right? Write down. Here some space is there. No, please write down. Put heading. Put heading. Accrual concept of accounting. Accrual concept of accounting. Accrual concept of accounting. It is the process of accounting for all expenses. It is the process of accounting for all expenses and revenues in the month only in which they are incurred, or earned even though they are not actually paid or received. Even though they are not actually paid or received. Means what? Here, we maintain the books of accounts to find the business results periodically. So this period may be every month, maybe a quarter, or maybe half year, or maybe a year. So at the end of the year, preparation of financial statements are mandatory. But some companies will prepare the P&L account and balance sheet every month. Why? Because they want to know the profit or loss for each month. Okay. Now, in order to find the profit or loss, what do? We compare the revenues of a month with the expense of that month. For example, if you want to know the profit for the month of June, we compare the revenues of the June with the expense of the June. Similarly, if you want to know the profits for the month of July, right, you compare the revenues of July with the expense of July. So how do we compare? Because we maintain the books of accounts. Whenever expenses are paid and whenever incomes are received, they're accounted in the books of accounts. Now, normally what we do, only when we pay the expenses, we account for them. And only when we receive the revenues, we account for them. But there are some expenses which are incurred in the current month, but paid in the next month. For example, rent of June is paid on 1st July. Rent of July is paid on 1st August. Similarly, let us assume that we are paying salaries on 1st of every month, right? In that case, salaries of June are paid on 1st July and the salaries of July are paid on 1st of August. That means what is happening? The salaries and rent of June are accounted on 1st July, and the salaries and rent of July are accounted on 1st of August. So in this case, if you prepare the P&L account and balance sheet for the month of July, will they reflect a correct picture of the P&L profit and loss and financial status? No. Why? Because the expenses relating to July are accounted in the month of August. So the P&L account and balance sheet for the month of July is wrong. That's why before preparing the P&L account and balance sheet for the month of July, we post some accounting entries. These accounting entries are called accrual entries. For example, we are in the fiscal year 2018 and we are in the June month. So on 30th June 2018, we are preparing the P&L account and balance sheet. But as on that date, as on that 30th June 2018, we have incurred rent, we have incurred salaries. But as on 30th June, you did not pay. When you're going to pay them? On 1st July. So in order to recognize this rent incurred and salaries incurred, we post one accounting entry. Say, for example, on 30th June, we post the entry, debit rent account, 10,000 rupees, debit salaries account, 20,000 rupees, and we have used the services of some commission agent and we have not yet paid them. So commission account at are 5,000. To outstanding expense account. So you have not paid, right? That's why this is to be credited to outstanding expense account. Now, by virtue of this entry, your rent account, salaries account, and commission accounts are updated as on 30th June 2018 only. Then your P&L account balance sheet will display correct picture of the profit. But did you pay these expenses? No. So this outstanding expense account is shown as a liability on the liability side of the balance sheet. Now, if you prepare this outstanding expense account, these three line items or these three items are posted to the credit side of outstanding expense account. Then these three line items are displayed in red color, meaning that they are open items. Open items means they are pending for payment. So rent, salaries, and commission, did you pay? No, they're pending for payment. So these three line items are displayed in red color. Okay, then on 1st July 2018, we have paid the above expenditure. Okay, in that case, we post the entry debit outstanding expense account, to cash rent 10,000 rupees, to cash salaries 20,000 rupees, to cash 4,800 rupees, commission 4,800 rupees you have paid. Then total debit is 34,800. Now, by virtue of this entry, right, these three line items are posted to debit side. Outstanding expense account, debit side, to cash rent 10,000, to cash salaries 20,000, to cash commission 4,800 rupees. Now, these three line items are paid, no? So these three line items are displayed in green color, meaning that they are cleared items or paid items. I hope till now it's clear for everybody. Now again, on 31st of July 2018, we are preparing the P&L account and balance sheet, right? Now, we balance this outstanding expense account. In the outstanding expense account, as on 31st of July, total credit is 35,000, but the total debit is 34,800 rupees. So there is a credit balance of 200 rupees. There is a credit balance of 200 rupees. It's not TDS, right? Lakshmanarayana. It's not TDS. Let us see what is that. So there is a difference of 200 rupees. In the outstanding expense account, there is a credit balance of 200 rupees. Here in the account, if the credit is more than debit, that is called credit balance. If the debit is more than credit, that is called debit balance. Okay. So in this case, credit balance is more than debit balance. So there is a credit balance difference of 200 rupees. Now, here my question is, listen to me carefully. My question here is, we are preparing the P&L account and balance sheet on 31st of July again, right? So in the 31st of July financial statements, where do we display this difference of 200 rupees? Whether you display this 200 rupees in the balance sheet as a liability, or whether you transfer this 200 rupees to P&L account. Just try to answer. Think for a while and try to answer.
Transfer to P&L, sir.
It is transferred to P&L, right? Yes?
Yes, sir.
Okay. Any other answer from anybody? Who is that? Who said P&L? You are right.
Yes, sir.
What's your name?
Akash, sir.
Sir,
Akash.
So you said, right, it is transferred to P&L account, right?
Yes,
And
sir.
Karthik is saying that it's liability. Any other answers from anybody? See, both are correct, but it depends upon the reason of this difference. Whether this difference of 200 rupees is to be transferred to P&L account as profit, or it is to be displayed as liability, depends upon the reason for this difference. I will tell you two reasons. Here, actually, we have provided commission of 5,000 rupees, right? But we paid only 4,800 rupees. Why? I will tell you two reasons. Here, the person to whom you have provided this commission of 5,000 rupees, he came to our office on 1st of July 2018, exactly at 4:30 p.m. Office closing hours are 5 p.m. So I am the junior cashier. Then he approached me saying that, sir, you have to pay 5,000 rupees commission to. Then I said, yes, you are right. We have to pay 5,000 rupees commission to you. But as of now, I am having only 4,800 rupees with me because it is the end of the day. And already main cashier has left the office on some outside work. So I cannot take from the main cashier also. So do one thing. As I'm having only 4,800 rupees, you take this 4,800 rupees, then you collect remaining 200 when you come next time. So till 30, that's why we paid 4,800 rupees and debit 4,800 rupees. That's why there is a difference of 200 rupees. After all, for an amount of 200 rupees, right? The commission agent did not turn up to our company till 31st of July. That's why still there is a balance in this account. He may come after 31st of July to collect this 200 rupees. In that case, it's a liability. So you have to display this 200 rupees difference in the balance sheet on the liability side. Clear? Now, another reason I will tell you. The person to whom you have provided this commission of 5,000 rupees, he said, sir, in this particular transaction, I am giving you a discount of 200 rupees. So instead of 5,000, it is enough to pay me 4,800 rupees. So I paid only 4,800 rupees. That's why there is a difference of 200 rupees. So if this is the reason for the difference of 200 rupees, you need not pay later, right? So it is discount received. Then it is transferred to P&L account. That's how, whether this difference of 200 rupees is to be transferred to P&L account or balance sheet, depends upon the reason for this difference. Now, if you prepare the P&L account and balance sheet manually, as a human being, as an accountant, you know the reason for this difference. Accordingly, you can transfer it to either P&L account or balance sheet. But in SAP, system itself will prepare the P&L account and balance sheet. In that case, how the system knows that whether this difference of 200 rupees is to be transferred to balance sheet or P&L account? For that, we use the tolerance groups. Here, see, tolerance groups means setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit and loss account or some predefined account like sundry balance return of account. So based on the requirements of the accounting department, we define different tolerance groups and we assign them in the respective GL account master records. So based on the limits specified in those tolerance limits, the differences in the GL account is automatically transferred to P&L account. Means, say for example, here we are defining 4 tolerance groups. Tolerance group A, upper limit 150 rupees. Tolerance group B, upper limit 100 rupees. Tolerance group C, 200 rupees. Tolerance group D, 250 rupees. Now, suppose for example, in the outstanding expense account, we assign the tolerance groups. Then let us say in the outstanding expense account, we assign the tolerance group A. Then what is the upper limit of the tolerance group A? 150 rupees. So the difference is more than upper limit, right, of tolerance group A. In that case, the difference will be taken to balance sheet by the system automatically. Suppose if we assign tolerance group D in the outstanding expense account, difference is less than the upper limit, right? Then it will be transferred to P&L account. See, if the difference is more than the upper limit of the tolerance group, that will be transferred to balance sheet. If the difference is less than the upper limit of the tolerance group, that will be transferred to P&L account. Let us come in the reverse way. Here, it is the policy of the accounts department that in this type of accounts, if the difference is equal to 200 rupees or less than 200 rupees, straight away write it up to P&L account. That's the policy. In that case, in the outstanding expense account, we can assign either group C or group D. So with the help of the tolerance groups, the system can decide whether the balances in this type of GL accounts will be transferred to balance sheet or P&L account. So at any point of time, say for example, today we have assigned group C. After some time, if you want to assign group A, we can change it. So based on the requirement, we can change the tolerance groups in the GL accounts at any point of time. That is the use of the tolerance groups. Again, I'm repeating, see here. Setting the maximum limits equal to which or below which the differences in the balance sheet GL accounts are automatically taken to the profit and loss account or some predefined account like sundry balance return of account. So a tolerance group can be assigned in any number of GL account master record. That means, for example, tolerance group A is there. It can be assigned in the outstanding expense account, outstanding revenue account, prepaid expense account, incomes received in advance account. So one tolerance group can be assigned in any number of GL account master records. Then the upper limits can be specified either for debit differences or for credit differences. We can define the upper limits either in terms of whole amounts or in terms of percentages or both. If both the terms are defined, the system will consider the lower of the two as upper limit and behaves accordingly. That means, say for example, tolerance group A. Tolerance group A, right? So you can define the upper limit either whole amounts. Whole amount means 150 rupees. 150, 250, 200, they are called whole amounts. Or percentages, 1%. Or both. Say for example, tolerance group A is, we defined both 150 and 1%. We have defined the upper limit in two terms. Absolute terms 150 and percentages 1%. So when you define both the terms, the system will consider the lower of the two as upper limit. Means 150 and what is 1%? The system will apply 1% on the total of the account. The total of the account is 35,000, right? So on 35,000, 150 means 350. Sorry, on 35,000, 1% means 350. So 150 and 350. Out of these two, 150 is the lower, right? Then the system will consider 150 rupees as the upper limit. Then what is the balance in the account? 200 rupees. Then this 200 rupees will be transferred to balance sheet. This is the tolerance groups for GL accounts. While doing the step, again I will explain. Define tolerance groups for GL accounts. Path is SPRO, means /n SPRO, financial accounting, general ledger accounting, business transactions, open item clearing, clearing differences, define tolerance groups for GL accounts. Don't write now. Click on new entries. Please don't write now. Suppose I want to define the tolerance groups like this, A, B, C, D, like that, right? Company code SSPN. Tolerance group A, you can give up to 4 characters, Then name, upper limit 100 rupees, debit posting 100 rupees, credit posting 100 rupees. And also you can specify the percentages. Click on save. Then I want to define tolerance group B, right? In that case, click on next entry button. Company code SSPN, tolerance group B, upper limit 150, debit posting 150, credit posting 150. Click on save. Then click on next entry button. Define the third tolerance group. Like that, we can define any number of tolerance groups, right? Now, write down the material. Company code is equal SSPN. Tolerance group blank. Tolerance group blank. Means don't write anything in the field, keep it blank. Name is equal to blank tolerance group for SSPN. Blank tolerance group for SSPN. Debit posting 1000. Credit posting 1000. Click on save. What is this blank tolerance group? Some space is there in the material, no? Please write down there. The blank tolerance groups, are also called null tolerance groups. The blank tolerance groups are also called null tolerance groups. Then blank tolerance groups, sorry, the values of the blank tolerance groups, is applicable to all the GL accounts, which are not assigned with which are not assigned with any tolerance group. Which are not assigned with any tolerance group. See, normally we assign the tolerance group in every GL account master record, right? But sometimes if you don't assign any tolerance group to any GL account, then the values, this 1000 is applicable to the balances in that GL account. Let us go to one GL account in another company code. That is 00. See, 1,500,000 account is the outstanding expense account or expenses payable account. So here we assign the tolerance group here. Suppose if you assign tolerance group A here, the system will apply the upper limits of tolerance group A 100 rupees. Suppose we did not assign any tolerance group here, then the values of the blank tolerance group is applicable to the balance in this GL account. So in addition to the required tolerance groups, normally we also define one blank tolerance group also, even in the real time also. Clear? No? So this is the concept of tolerance groups for GL accounts. Then the next topic is tolerance groups for employees. It takes more time, right? This we will see. We cannot. So this topic we cannot stop in between. So this we will see tomorrow's class straight away. Any questions in today's class or from the previous class? Probably from Monday, right? We start general ledger accounting, and I will send you the complete FI material along with tomorrow class recording. Any questions from anybody, please? I hope everybody has started the practice. Yeah, Raya.
Sir, good morning, sir. Sir, in this tolerance group, as you said, if the value is we have defined as debit posting 1000 and credit posting 1000, and apart from that, you said one blank tolerance group also to be assigned. That means
No. Not to be assigned. Normally, the blank tolerance group is also created.
Okay.
So when you don't assign any tolerance group in the GL account, right? Then the values of these tolerance groups are applicable. For example, in the outstanding expense account, in another company code, we did not assign any tolerance group. We kept this field blank.
Okay.
That means the values of the blank tolerance group 1000 is applicable to the balance in this account.
Okay.
Got it?
And this tolerance group also to be mapped to the particular GL account only, right, sir?
Yes, yes.
Okay.
See, this is the GL account only.
Okay.
GL account 1,500,000 expense payable account, right? Here we have to assign. Suppose if you assign A, 100 rupees is applicable to the balances in this GL account, right?
Right.
Suppose if you don't assign anything, you are keeping the field blank, means blank tolerance group.
Okay.
Clear, no?
Clear, sir. Thank you.
Okay, then see you tomorrow. Good night and good day.
Thank you.